as we take a look at how the markets are performing on this day. The Johannesburg Stock Exchange was little changed amid mixed global markets this morning, with investors focused now on the Reserve Bank's Monetary Policy Committee briefing a little bit later on this afternoon. Gary Booysen, who is portfolio manager at Rand Swiss, joins us now for an update on the latest market moving stories. A very good afternoon to you, Mr. Booysen. Now, taking a look at the Rand, it was trading near a 10-month low in early trade, and this is before the widely anticipated rates meeting later on this afternoon. How is it faring now?
So we haven't seen too much movement in the local currency, especially against the rand-dollar pair. We see the dollar picking up against some of the other emerging market currencies, but we seem very stable around that 15.45 to 15.50 level. It does seem like the top of the technical range as well. As I think everyone is just looking at this MPC meeting and just waiting to see whether we're going to get a rate hike or not, and then use that to inform their decisions around where the currency should be priced.
Now, economists are split on whether the rising price pressures will prompt South African Reserve Bank to lift its interest rates from the 5-decade lows. Some are betting on a 25 basis point hike, and others are seeing the repo rate remaining at 3.5%. What is your view? Will they hike or will they hold?
I think it's a very difficult decision for the Reserve Bank at the moment. Obviously, we're suffering incredibly with lower growth, and I think the problem is that monetary policy alone is not able to solve the structural issues in South Africa. Just by leaving interest rates lower for a little bit longer isn't going to give us the ability to solve an energy crisis, for example. So, as you say, the consensus view is very split. I think our in-house view is that we're going to see a 25 basis point hike. It's a pretty small hike when you consider what the impact will be. An extra 25 basis points on a home loan, for example, is not going to put us under too much pressure. But I think it will send a very important message to the international community, at least, that we are responsible from a monetary policy point of view, and it will, I suppose, help with comparisons to the likes of Turkey, who have maintained very, very low interest rates at the moment, and they're seeing it in a much, much weaker currency. So our inflation is within the target band still, but it is on the upside, on the high side of it. So I think if I had to bet, I would probably say that we're going to see a 25 basis point hike, but the market currently pricing in a lot of uncertainty around the result.
Now, the Life Healthcare Group has released its results and the cash dividend declaration. If you could talk us through the group's overall performance.
So the group didn't do too badly. So group revenue up just over 12%. The international segment really the bulk of the contribution up 19%. So profit contribution, they now make up 38% of the group's business. This is the second largest hospital group in South Africa, but as we see with many of the hospital groups, they are struggling just because essentially you would think that they were doing very well because they're going through a pandemic, but essentially struggling because of those non-elective surgeries, at least those elective surgeries and the non-COVID related treatments that are really their high margin products. So I was listening to the CEO speaking earlier, sort of painting the picture that for Life Healthcare, they essentially almost benefit from COVID, maybe a little bit more than some of the other hospital groups. But the fact remains that if you look at, let's say, their theatre minutes, they're still down from the 2019 numbers. They've obviously improved off the lower base that we saw in 2020, but since 2019, the pre-pandemic numbers, they still haven't recovered to the amount of time that patients are spending in surgery, for example. So definitely the pandemic still affecting them, still skewing the numbers, but overall I thought a decent set of results for the group.
Now, Tsogo has also released its trading update for the 6 months ended the 30th of September 2021. Has the hotel group progressed past the pandemic woes?
No, absolutely not. So the numbers look very good, if you compare them to a year before, but that's because the year before everything looked horrible. So currently their room sales are at about half the pre-pandemic level. So again, if you go back to the 2019 numbers, they're about halfway through in terms of their sales figures. They're expecting sales, and this is a trading update. We don't have full results from them, so the information is quite limited. But they're expecting between 895 million and 1.025 billion in sales, which, as I said, it takes us about half of where they were in the pre-pandemic context. Year on year, it does look good, and it is obviously incredibly important for the local economy that we see the likes of Silversun recovering. I mean, the hospitality sector and the tourism sector, very important for the South African economy. But the group's still going to report at least a loss per share of between 9.8 cents and 12.2 cents. So not quite out of the woods yet, but definitely looking steady improvement from the depths of the pandemic last year.
Now, Investec has published financial results for the 6 months ended the 30th of September. How are those numbers looking?
They're looking pretty solid. So, if you compare a bank to a hospitality group, they look absolutely outstanding. So, I think the market's liking them as well, up 1.3% on the day, just in terms of the share price. But overall, the group's looking pretty solid. So, their wealth and invest, funds under management up 8.6% to 63 billion pounds. Their loan book also improving, up 7.2%. The cost to income ratio also improving down from 72% to 64%. So overall, the bank, I think, delivering a good set of results. But I think what really got the market's interest is the top of the chairman's statement, which just said that they are going to be unbundling 15% of their 25% holding that's to shareholders in the 91 group, which was formerly Investec Asset Management. So that's going to be split off to shareholders, and they'll see that pop into their portfolios. But overall, also, I think a very decent set of results from Investec. We're seeing their dividend increasing nicely, going to be paying 11p versus the 5.5p they paid in 2021, and just showing that, yes, we're not out of the pandemic yet, but from a banking point of view, we can see the economy is starting to lift. And obviously, Investec being a private bank, typically focused on higher LSM clients, again, we just see that the resilience of the wealthy and ultra-wealthy when it comes to economic shocks.
Well, thank you very much for today's market update. That is Gary Booysen. He is Portfolio Manager at Rand Swiss for this Thursday market update.